Hello, my friend. What's going on? This is Emmanuel Adegbola, aka the Forex Apostle. I want to thank you for this video. And in this video, we're going to be looking into Forex trading emergency, response and preparedness. Forex trading emergency response and preparedness. Something happened last week. To some of my students and even myself. And that was what prompted the topic. So we'll be looking into that. But if this is the first time that you are visiting our channel and you have not subscribed to our YouTube video, come on now, do me a favor, smash on that subscribe button right there, subscribe, and smash on that bell button so that when next we upload a new video, you will be updated and you'll be informed. Okay, do that for 5 seconds and we shall continue with this video. Thank you. All right, so how many of us are very familiar with that sound? How many of us, if you are a Forex trader, you'll be trading for a while, or maybe if you are demo trading, you are not familiar with that sound when it comes to Forex trading. But if you have been trading live by now, I want to believe that you must be very, very familiar with that sound. How many of us? How many of us, you can just type one on the chat window? How many of us are so familiar with that sound in trading? When you are trading and all you could just do is like, okay, you should just get an ambulance to rush to your Coinbase or your whatever wallet you are using to get extra Bitcoin. Okay, I see Charles. Yes, maybe some of you didn't get that sound again. Let me play it all over again so that you know what I'm talking about. This is the sound. Okay, so that is the sound again. Hello, my name is Emmanuel Adegbola, aka the Forex Apostle, and I want to welcome you to today's video training, and I hope you're going to get something out of it. Something happened last week that, in fact, I received a call from some of my students. My account is burning out. What can I do? This, that. So, and I was just thinking that, okay, so how can we undo such situation? And that was why I came up with the topic Forex trading emergency response and preparedness. So what do you do when you have situation that calls for emergency response, and of course, how do you prepare for it? For some of us in the state of Texas, we just witnessed a power outage. To some of you outside of US, it's like, okay, what are we talking about? That shouldn't be a news, right? But to us here is actually big news for us to have power outage for more than 2-3 days. And of course, that forced me to go get myself a generator, get a rechargeable lamp, get, all of that. So we're talking about emergency preparedness. So in Forex trading, how do you undo that? That is what we are going to be looking into today. But before then, I want to see if any of you have any question. Do you have any question? Any question from what we have done before? Any question? Any question from what we have treated before? The members area, you concerned with anything? Any question before we go into that? As I said, we're going to keep today's training very, very fast, very short, because of some of you. I believe it's 10 p.m. right now. So, any question? Any question? Any question from anyone about maybe what you're going through your trading, or you want to share your experience, how you've, maybe you have that kind of an emergency in your trading and you are wondering, okay, what should you do? Anyone wants to share their feedback?
This is Francis.
Okay.
I want to share my experience on the live account because I haven't finished my training yet. This
Okay.
is the my third month in the program.
Okay.
So so far so good. On my second month, I was demo trading and I thought already I knew what I like some few strategies on Tradermatic.
Mm-hmm.
So then I proceed to go live. And the moment I started on the live trading,
Mm-hmm.
my first two trades were good. Then I decided to try something else, which was outside what you thought.
Okay.
And that was from the Phoenix, the big Phoenix green and red.
Mm-hmm.
Yes, on the bullish box. So I decided to trade when I see the big uh, red
Finish.
Phoenix. Yes, I
Mm-hmm.
decided to trade the reverse on a green bullish box.
Okay.
So what happened was when I did that, I thought I'm going to go on the reverse direction. So with the amount I have in my account, over $1,000, I guess. Yeah.
Mm-hmm.
So it went down to about $300 in balance.
Okay.
But it didn't hit my stop loss. So I just kept on adjusting the stop loss, adjusting the stop loss. Then I called you. I remember, if you remembered some time ago, I chatted you. I say, Apostle, great mentor, please help me. I'm, I'm about to lose my account. So I was the one who chatted you up, and you said I'm using over 0.9 lot size, and that is over leveraging the account. So out of the analysis, you told me there's a possibility it's going to retrace back,
Mm-hmm.
and if it retraces, that I might get back the money. So I was hopeful to that, and and you said you're an aggressive trader though. That if I'm going to go back and just manage the trade. So what I did was I had to keep shifting my stop loss, and I realized the trade started reversing backwards. So I started shifting the stop loss, adjusting it, and at the end I was able to manage the account, but I only lost about $150.
Oh,
Yeah.
okay. Okay.
Yeah, so
That
then I
was
closed it.
that was at least that was not bad enough. Not bad enough.
it,
That was not bad. That was not bad enough at all.
yeah, it wasn't. It was a big experience for me. And right now, I decided to do something. After that experience, I knew that I haven't learned enough on Tradermatic. So this is what I do recently now. Before I start trading in the morning, I first watch the Tradermatic video. This
Mm-hmm.
is like a ritual for me right now. Like before I start anything in the morning, I will watch the Tradermatic video all over again every day. This is what I do.
Mm-hmm.
And to the glory of God, and with your expert tutor to training, I think right, I'm averaging between 20 to 30 pips per day.
That's
So
good. That's good.
I'm so grateful, sir. I'm very
That's good.
grateful, sir.
That's good.
Yes.
Thank you so much. So let me share this with you. I don't know if I don't even know who sent this to me. I believe it's one of my one of you actually sent this, and he says, "Sir, I need your help. I burnt my $2,000 account today, and I don't want to stay without trading. Without trading, it is an account I managed to build from 1K that you sold to me in October." That's okay. This person bought. I think I helped this person bought Bitcoin $1,000. That was in October. And you will agree with me that this person to have grown this account from October to January, right? Or let's say February. So in 4 months, to have grown the account of 1,000 to 2,000, definitely this person has tried, indirectly, he has or she has definitely doubled the account in 4 months, which was a very good job. But what happened last week is that this account was burnt out. So what happened? What do you do in that kind of situation? Those are the kind of things we're going to be looking into. I also have a client that I personally manage his account that we have almost minus $100,000 last week with a trade.
Wow.
So minus $100,000, and what happened was I'm going to show you guys, the euro AUD. We suppose, based on the analysis, I was expecting double bottom like this. Okay, this is like a key level. So these are the key level. So I was expecting double bottom right here. There's a different trading style that I normally trade with some of my clients, and that is the banking's trading style. It's called grid style, GRID. So when the market is when the market is coming down, what the bank does is the bank will be opening long position, actually long position. So by the time the retailers are saying, oh, this market is going down, then they also want to join the short. Then that is when the bank kind of reverse, and so all these trade, you start packing their lot size. It's a different trading style actually. Now, but what happened with Euro USD is that instead of reversing in this place, it reversed small and just began to go down. So this was what caused the emergency. So you see, that was what caused the emergency. If this trade would have gone way back up, that trade would have given us clean almost $85,000 clean. But by going down right here, it put the account at risk to the extent that I have to call him that, okay, we need to get some fund. And that is what I'm going to be discussing. So we have to get some fund to this account to bail out this account. I actually know almost about 300 people that their account were burnt out on the same trade last week. So what do you do in this kind of situation? Those are the things that we'll be discussing. So first of all, let's start from the basics. And the basics is the risk and money management. Risk management, you see, it is very easy to grow $100 account to $200. In fact, it is very easy to grow a $500 account to $1,000, because at this time you are very disciplined. You will stick with and most times you don't even mind whether you lose the money or not, because at this stage you don't really have much to lose. Have you been in that kind of situation whereby okay, you don't really have much to lose, but it becomes tough once your account start getting to $5,000, once your account start getting to $10,000, people start relaxing. So when they start, it happens in ministry, it happens in marriage. So you see husband and wife, maybe the man always buy flowers for the lady before she comes in. As soon as she becomes the wife, no more buying of flower. It happens. So the same thing in trading. The risk management, the discipline, when your account is small, by the time the account starts growing, you begin to reduce it. It's normal. It's just normal. Your level of discipline begins to reduce. And that is why Forex trading it takes discipline. It takes discipline. So you have to, if for instance, you are trading and okay, what you are doing with your account when the account is $100, make sure it's the same thing you are doing when the account is 100,000, and make sure that's the same thing you are doing when the account is 1 million. If you are risking 2% when the account is this, make sure you are risking the 2% when it's this. I know it is easier said than done. Do I follow that rule? No, myself. But that is the rule of the game. Okay, that is number one. Risk management. Always. For instance, I've said this over and over, that you don't risk more than 2 to 5% of your account. Why do you have to do this? It kind of makes sense. So let's say, for instance, you open a trade, your account is $1,000, and you are risking 2% of this. And somebody will say, what do we mean by risking? What that simply means is that, okay, your account is $1,000, and the position you are opening, you are not risking more than $20. I believe that is 2%. That's 2% of $1,000. So you are not risking more than $20. So if you lose this trade, you still have $980 remain in your account. And you will not, this $20 will not kill you. That is number one thing. You need to. Now, another mistakes I noticed some people are doing, and one of you did it last week. I gave you a trade signal for four different signals. And this person plays the 4 trades. Okay. And normally he used to place a trade for like 0.2 lot size, 0.1 lot size, but because he has been winning all these trades, he just kind of assumed that the other ones also will be the same thing. So he went ahead and placed 1.0 lot size. So 1.0 lot size for the first trade, 1.0 lot size for the second trade, 1.0 for the third trade, 1.0 for the fourth trade. That is 4.0 lot size for an account that ordinarily he would have traded 0.2. Do you see what I'm talking about? So now you need to also understand that the signals generated when we give you signals is most of the times I generate the signals on 4 hours or daily. So the risk involved, talking about the number of pips, some of the trades you could be risking like almost 100 pips. So just imagine if you now have about 4 lot sizes and you are risking 100 pips. So rule number 2 is for what? How you prepare for this kind of emergency not to happen is for you to what? Stick to your money management. Okay, your money management. And I've told us this. If your account is $1,000, let me repeat that to you. On no circumstance should you be trading, if you can't even be trading 1 lot size on this account. If you are trading, let's say on 1 minute, 5 minutes, 15 minutes, and possibly 1 hour chart, and the account is $1,000, you can be trading 0.1. Does that make sense? So it therefore means that if your account is $5,000 and you are trading on this time frame, then you will be trading how many lot size? You can type, because I've disabled everybody to be able to talk. So you can just type it. So if the account now is $5,000 and you are trading on 1 minute, 5 minutes, 15 minutes, or 1 hour, so what will be the lot size here? Let me see. What will be the lot size? That will be 0.5. So that will be 0.5. So if your account is now $10,000, then what do? You can trade how many lot size? That will be 1.0 lot size. That is if the account is what? If you are trading this, and I'm assuming that you are using leverage of either 1 to 100 or 1 to 200. Okay. Now, what you also need to understand is some of you are using an account that is using, let's say, leverage of 1 to 500. If I place a trade, I'm risking, let's say, like 20 pips, and you are placing a trade and you are risking 20 pips. By the time you have burnt out your account, mine might still be in a safe position because of the leverage. So we've talked about leverage. So always make sure that you play according to the template I'm giving to you. It will help you. So if you are trading on 1 minute, 5 minutes, 15 minutes, 1 hour, then you should be following this template. Now, let's now assume that you are trading on 4 hours or daily. That is, you are a long-term swing trader. So if your account is $1,000, what are we expected to be trading will be 0.01. And if your account is $10,000, you are trading 0.1. Why the change? Why the change? Because if you are trading on 5 minutes, 15 minutes, you might be risking, your risk is lower. Let's just put it that way. Your risk is lower. Like in this place now, you might be risking like 20 pips for a trade. Maybe over here, you might be risking almost 200 pips. And I'm going to show us in a minute. So that is what makes the difference. That is number one. Now, number two is if you are going to be trading more than one currency pairs, then you now have to divide this again. This is I'm assuming that you are trading one pair, one currency pair, that is with all of this. But if you are going to be trading with, let's say you are going to be trading 2 pairs and your account, so you want to trade 2 pairs or 2 trades, and you have $1,000 account. So when you have this $1,000 account, normally you're supposed to place a trade for 0.1, but you know you are going to be opening 2 positions. So what do? You divide this by 2. So this gives you 0.05. So you now have 0.05, 0.05. So at the end of the day, it still fall back to 0.1. Does that make sense? If that makes sense to us, just type yes. Type yes. I decide to disable everybody to be able to talk because there are some people just making noise. So if that makes sense to you, okay, good. So that is how you do it. Then, so let's now assume you want to trade 4 pairs. You want to trade 4 pairs. So what do? So this will now be what? You will now divide this by 4. And it therefore means that you are looking into something like a 0.03, 0.03, 0.03, 0.03. So at the end of the day, that will give you like almost 0.12. So you are still within the range. Okay, you are still within. So that is, now let me quickly show us what I'm talking about. Then we'll continue. So let's say, okay, this is 15 minutes. If I'm trading on 15 minutes, and let's look if we go place. Okay, so this is 15 minutes, right? This is Tradermatic. If I enter a trade here, please just follow. Just follow me. It's this is a live account, so I'm not going to be placing any unnecessary trade. If we enter our trade right there, okay. If we enter a trade right there, just as you see, this is a trade. Okay. Now, if we enter a trade there, this will be our stop loss right there. So take a look at what we are risking. So it therefore means that we are risking from here to here. You are risking just about 17 pips. Do you see that? You are risking just about 17 pips because that is what on 15 minutes. But the same pair, if I go to, let's say, daily, let's say I go to daily charts, let's look for something reasonable. Okay, let's say this one here. If I'm entering a buy position right there, my stop loss will have to come to this place because this is the lowest low before this point. So take a look at how many pips you are risking with that trade. This is only, you are risking 240 pips. So can you compare 240 pips and 20 pips and you want to use the same lot size? So that is what is causing problem in most situations. Does that make sense to you guys? Does that make sense? So okay, good. So does that make sense? Anybody, do you have any question based on what I just treated right now? Do you have any question? So now you understand that concept. So let's now assume that you have a trade going on, which your account is $1,000. What I call the emergency response or emergency preparedness is number one, try to have a backup. Try to have what? A backup. Just like when you have auto insurance because of the day your car will break down, you have auto insurance, home insurance because of the day that you will need help with home repairs. You have legal insurance because of the day that one way or the other you will have to fight some lawsuit, right? So you have health insurance because of one day that you might be sick and you will need help with the hospital bill. So I call this one Forex insurance, and it's something that you create for yourself. So if you have an account that is $1,000, make sure that on your most of the brokers like FX Choice has wallet. I've been trying to log in, but it's like they have maintenance going on. So FX Choice has a wallet. So in this wallet, you can have some money reserved there. Maybe like, for instance, like here now, you have $300 reserved there. If your account is 1,000, if your account is like $10,000, you might have like an extra $2,000 in your wallet. That money, you are not trading with it. Okay, you are not trading with it, and I'm going to be explaining what that. Some of you that this has happened to before, you will understand what I'm saying now. So let's assume it happens that one way or the other you move the stop loss of your trade. I do it always, even though we teach you not to do that. So let's assume you move your stop loss, and one way or the other the market keeps going down, and you are very well assured that the market will reverse, like the situation of Euro AUD that I showed you guys. In that situation now, it will be very easy and very fast for you to move money from your wallet to this account to kind of help your free equity than to now start looking for where to buy Bitcoin to fund. Sometimes you might not have that privilege. You might not have that opportunity. Like, what actually helps this training? What motivated this training that I'm doing right now is because of that account that I have with my client. I have to give him a call and say, hey, boss, it's like we have to fund this account with extra 50,000. So we have to find a way of raising $50,000. And if you have been buying Bitcoin, you know what that means. It will take you a while for you to be able to buy large volume. Sometimes if you are buying with checking account, it will even take almost 1 week for it to clear. So we have to find a way of buying on a higher amount in order for it to be available to send to the broker. Now, we are able to rescue the account by doing that. But hey, what if we didn't have that option? We would have burnt out that account. Okay? So, my wife kept telling me, I say, hey, it's this account. I don't want this. So, I received calls from 2-3 of you also last week. Hey, Apostle, what can I do? What can I do? Now, in fact, there was one of you that had to like wire $2,000 extra to his account. So, if you have this wallet backup, it will be very easy for you to just move money to it. Now, what I just shared right now, does that make sense to somebody? Does that make sense to you guys? If it makes sense to you, or who has experienced that situation and you just want to share, this is a closed door training. So who has experienced that kind of experience, and who has experienced that, and what maybe you just want to share with others? You just want to share with others. Who has that experience? Who has that experience? Okay, so let me quickly show you what I was the trade that that actually prompted this topic, and that was a Euro AUD. So Euro AUD, this was let me look for it here. Crosses Euro AUD. So this was a trade, right? This was a pair. So what happened, let me use this so you see it clearly. Okay, so on daily charts, this is a trade. On daily charts, we have this. So when you look at this right here, okay, you will agree with me that if you are familiar with structured, we are expecting something like this, and for this to go like this. That would have given us what we call double bottom. And that is, for some of you that have been following me for a while, you know that I'm not really fans of all this double bottom, double top, upper wedge, lower wedge, because it doesn't work like that always. Now, this situation, this is what we expect. So this would have been something like this. In fact, the take profit of that trade would have been like somewhere here, which would have been a lot of money. Now, but what happens? After we have this, we expect this to reverse. You see that candle right there, start going up, and before you know it, the sellers step in and push it down like this. So it was later on that I say, oh my God, what is going on here? Then I now discover that, okay, we have this channel. We have this channel right here. Take a look at that. Then we have this. Kind of something around here. Let me draw that one. So we have, let me see, something like this was what we have. Something like this. So I said, okay, now that was after that pattern failed. So we have this. I say, okay, so we have this, like this, like this, like this, then like this. That was when I now said, okay, this is what is going to happen. This market will not stop until it gets to this level. And that was exactly what happened. And you can see what happened right here. You see that engulfing candle. And I think I finally gave you guys this signal. So you see what happened right there. So basically what I'm trying to say is that, you see, there is no strategy that is 100% winning strategy. So always try to create that backup for yourself. So when you have a trade and that trade is a winning trade, is doing well, fine, thank God for that. But if you have your account and let me see if FX Choice is live now. So I'll show you what I'm talking about. The maintenance is still going on. They still have maintenance going on, so I would have showed us, you see, we still have maintenance going on here. But I believe you guys have gotten what the information I was trying to pass across. So the first thing, number one, is your risk management, okay? But let's assume that you drop a ball right there, and you've not followed that, you've broken the rule of that risk management. Then number two is that have a backup plan. So the backup plan will be the money in possibly your reserve account that you are not trading, so you can easily move that money around. Then number three, for some of you that you have a crypto exchange platform like Coinbase, you can have extra Bitcoin, because since most of the platforms use Bitcoins to fund you can use Bitcoin to fund most accounts. So you have extra Bitcoin, so that when the account you need it, it's not that time that you will now be looking for somebody to sell you Bitcoin. You know that you already have Bitcoin. All you have to do is move it, and within 30 minutes it will get to your account. But if you have to buy, all over. It depends on how much you are buying, but it will take you a lot of waves. Remember what we are talking about. We're talking about emergency response and preparedness. Just like what happened last week over here, that we have to start looking for generators, start looking for this, start looking for that. So you don't want this to happen to you. For some of you that you are not trading right now, maybe what I'm talking about might not make too much sense to you, but when you are now trading, you will know what I'm talking about. Because this trade right here went down to the extent that I still have the trade on. The trade went down to the extent I have to open 80 lot size in this place to save the account, so that I have to carry it. I have to open that 80 lot size, and the trade of the 80 lot size went as deep as give us almost $130,000. That if we have enough in that account around that time, this would have been like jackpot. We would have just closed that trade and write the reverse trade up. But because we didn't have enough, in fact, I have to do, let me see, I have to do something on my Excel. Let me see. So this is the table I have. You can see I have to, like, okay, this is a lot size. The one that I have, this is buy. These are the buy position. So this is the one I have now on short position. So I have 103.34 lot size on long position, and I have 94 on short position. So what now helped the account to be able to accumulate and to grow was this positive. Of course, you can see that's a difference of about 10 lot size. So it's like I now traded 10 lot size. Now is now what brings my account and begin to pull it up. So, however, what I'm trying to say in essence is that always make sure that you have what backup fund. And lastly, on this, which we might not be able to cover today, is to try to also understand the concept of hedging. Hedging simply means that, okay, you place that trade, like in this situation. What did I do? I just opened a reverse trade. So that reverse trade is what helped the account to be able to hold. Another thing you can do in this situation, as I said, some of you that you are still demo trading might not understand this concept, but keep the knowledge, because you will need it one day. So something of this nature, if it is, let's say for instance, give me a minute. Let's say, okay, I put a buy position. Just an example. You buy over here and the market reverse against you. Immediately close your order. Okay, just close it and open a reverse trade. So most of the times you will get back what you lost. And then lastly, before I take one or two questions, when you are also editing, this happened to me last week, and that is why I'm teaching it. I wanted to modify a trade. I right click. Instead of clicking modify, I just click on close order. I don't know if it has happened to any of you before. And of course, because this account is on one click mode, it will not tell you, are you sure you want to close this order? For some of you, you don't know what that means. If you just install MT4 newly, if you go to tools, options, you will see trade, and you will see one-click trading. So if your one-click trading is on, it will not ask you to double check the operation you are trying to do. So because the one-click trading is on, so I right-click, I wanted to modify, I mistakenly click on close order. And I tell you what, I closed a trade that was reading minus 4,000. And because of that, the second day, I promised myself I was going to make it back. Of course, I made 12,000 the following day. But what if I didn't make that? Some people, that 4,000 might be what we close down that account entirely. Okay, I don't know if this lesson makes sense to some of you, but I believe strongly that this is the first time I'm teaching it. I've not heard anybody talk about this emergency response and how to prepare for it, especially in Forex before. So make sure that you keep that handy.